Hi, I'm Jeff Hirsch. I'm here at the Money Show with Dr. Adrian Manz. He is the co-founder and daily contributor to TraderInsight.com. And you've uncovered something with the Trump effect, that there's a certain hour of the day that people can profit from, 1 hour a day. And what is it that you uncovered this year with the change of things?
Well, so we've been intraday traders going all the way back to 1997, and over the various administrations that we've had, things have been more or less smooth around an open, more or less smooth over the course of the day. And what we found for the past year and a half is that the opening volatility is pretty extreme, and that there's things that we can do to handicap what part of the volatility to focus.
Is that related to those early morning, middle of the night tweets?
Yeah, 2 a.m. tweet is pretty much a thing that'll get the market off to a rocket start.
It's interesting that's presented itself in a pattern like that. So what did you discover?
Well, for one thing, we've got an opening gap model that goes through and looks at gaps that are 2 standard deviations of true range, right? So we use true range as a proxy.
And that's gap up or down?
Gap up or down. And that puts us out at a 95% probability, the tail of the distribution for a mean reversion. So we get our guys focused on, that's one of the first trades in the morning is we're going to go, we look for the gaps, we look for things that are earnings driven and responding to all the additional volatility, excess volatility in the markets.
Right. News flow.
We've got patterns that we're looking at within the gap, right? And just simple things of where we're going to place targets, where we're going to place
What kind of patterns you looking at within the gap?
Well, it's basically a pullback. So our preference is always that the gap continues to move in the direction. So let's say it's a gap higher. We want to see maybe
Continue
3 or 4
to move higher.
bars where the lows are higher and they keep going up, and then we treat it like an intraday pullback. As soon as it violates the highest low, we're short the stock and we're shorting it down to where we have the biggest volume in the morning.
That's cool. And then I assume on the inverse of it, if it gaps lower, 3 bars lower, when it violates the higher, it goes higher than the lowest high. Right. Then you go along that.
Right. And you're always then targeting. We do a big volume by price study. We use Realtek as our trading software, and the way that it plots, it'll do your volume histogram by time, and it'll do it by price on the side. And we just go through and identify where the big buying or selling momentum was in the morning, and we just try to get right just shy of that as a target. And it's
Excellent.
really profitable.
Adrian, very, very clear. I like the explanation. Thank you very much.
Thank you.
Thanks for joining us.